Started. Okay, so what we are going to discuss about rating today. Okay, so what exactly rating is all about and why rating is important. Because rating means any given policy submission taken place. So we need to calculate the quotation for the particular policy submission. So this is again depending on what type of insurance policy customer has applied. Either it can be commercial or uh, personal property or home auto insurance or property insurance or something. Depends on the kind of risk assessment, etc. So we need to calculate the quotation. Means calculation of the quotation to be provided for the customer is important. So if you want to provide a quotation to the customer, there must be important, which normally we call it as rating. Okay, rating concept come into picture. Rating means under what condition rate will be calculated, because there will be a rating engine which calculates the rating, etc. All that, right? So this is all something generally happens in the rating part. Now, first of all, when it comes to the rating part is concerned, there are some key concepts for there. Please make a note. Guidewire rating. Please make a note. Guidewire rating.
Yes.
Guideware rating. Majorly. Guideware rating majorly focuses on the rate of the particular policy submission, rate of the particular policy submission, rate of the particular policy submission, customer
Okay.
applied for, customer applied for, customer applied for, customer applied for, customer applied for. Uh, so, comma continuation. Hence, knowing over the
Okay.
rating, knowing over the rating, knowing over the rating is important. Knowing over the rating is important for any guideware teams. For any guideware teams. Okay. So, right. So which generally classified into four parts. This rating concept will be classified into four parts. Four parts. The first one is called
Okay.
rating factors. First one is called rating factors. Second is called rate book. Second is called rate book. Third is called rating rules. Third is called rating rules. Fourth one is called rating engine. Fourth one is called rating engine. Right. So these are the four ones. One is rating factor, rate book, rating rules, and rating engine. Now, rating factors, right? Rating factors. Rating factors like uh, vehicle age, driver's age, property, age of the property, etc. This is what we call as rating factors. Rating factors means if you want to provide rating, if you want to calculate a rate for the particular submission, we must be knowing about rating. Okay, rating factors are important. Rating factors means what should be the rate should be calculated. Okay, rating factors relating to that means it is depending on multiple reasons. Okay, uh, sometimes it can be vehicle value of the vehicle. Okay, age of the vehicle, right? So driver experience of the driver, or any kind of accident history or something were identified. So the property, age of the property, at the same time, where exactly the property is located, what kind of material is being used within the property to store. For example, there are factories. Okay, factories, they
Mm.
manufacture some products which can be some risky products. Okay, so that can be right. So that can be having a risk, right? So what type of products they are manufacturing? So commercial vehicles, at what kind of routes they were traveling, that vehicles are traveling, what kind of material are they transporting? Some liquid material or something, it will be at higher risk. So rating factors is
Mm.
a concept where what are the factors behind? Either it can be vehicle age, property age, okay, property geographical location. Geographical location, sometimes the property is near to the seashore, property is near to the forest, property is near to the landslides. So where because of the natural calamity or so, unfortunately, so it will get more impacted. So understanding of the risk assessment, rating factors is the first one. Okay. Second, rate book.
Okay.
Rate book. Rate book. This is a collection of rate tables. This is a collection of rate tables which defines which defines how the premium is calculated. How the premium is calculated. Means what is the rate table, etc. Based on that premium will be calculated. Rate book. That is called rate book here. Okay. Second one
Okay.
means what is the rate cost, etc. Right. So that is called rate book here. How the premium will be
Okay.
calculated. Rate book means rating card will be there. For base rate will be there. Based on the base rate, based on the risk factors and all, rate will get upgraded. Okay, that's all comes under the rate book. Third, rating rule.
So Raj, rate tables in the sense we have some predefined
Predefined table. Yes, yes. I will tell you. I will tell you.
rules.
Rate
Yeah.
table.
Okay.
Yes. There are pre-table is there. Pre-table is available. I will discuss in the
Mm-hmm.
next session about that. Okay, rate table,
Sure.
rate
Sure.
book, etc. So predefined table is there. Okay, that's a
Mm-hmm.
basic rate table. Okay, basic rate table. Based on the risk
Okay.
factor, this is what the base rate is. But this base rate is only the base count. Okay, that's the reason. If you
Mm.
remember when we created a quotation, if you can remember that there is a point you can see called base premium. Okay, base premium $50. If you remember when you created
Mm.
any application policy submission quotation, when we create in that quotation detailing, you can see in the beginning you can see base rate, base premium is $50. Okay,
Mm. Mm.
based on the coverages that we have added, automatically remaining will be added, and finally you get the rate card. Okay, finally you get the quotation number. So this is called generally
Mm.
rate book
Mm.
based on the base rate table, whatever is there. So based on that, rating will be calculated. That is called rate book. Point number two.
Okay.
Point number
Okay.
three,
Okay.
rating rules. Rating rules. These are the ones. These are the ones where logic will be applied. Where logic will be applied, which decides. Logic will be applied, which decides how the rates are applied. How the rates are applied based on the conditions. Based on the conditions. It is very simple, because old vehicle, okay, old vehicle, there is a possibility of high risk. Premium will be higher. If it's a new vehicle, you don't find much risky, okay? Because in terms of the condition I'm saying, okay? So that premium will be moderate or normal. The same way even building also, because years old building, so the calculation is different. New building, the calculation is different. So these are all we call it as rating rules. Okay, rating rules means based on the
Okay.
vehicle, based on the property condition, right? So property age and all. So we are applying higher premium. That is called rating rules are. Okay, rating rules are relating to that. Rating rules.
Yeah.
Rating rules. Next, rating engine. Rating engine. Rating engine where system calculates, where the system calculates where the system calculates premium based on the rate book, based on the rate book and rating factors, based on the rate book and rating factors. Because based on the inputs that we have given, okay, automatically rating engine will calculate the premium. So because if you remember when we have given the inputs in the application, so whenever you are going for a quotation, automatically it will create a quotation. On what basis? Because there is a rating engine which automatically calculate the coverages, etc. What we have given, and finally it will give you the quotation there. Okay, this is all about the rating engine part. Put a
So
note.
Raj, here rating engine in the sense it's a custom logic developer written, right? It's not
Developer
something
written.
like
Yes.
okay, okay.
Developer a note. Write down the note. That's the reason why there can be third party rating systems. There can be third party because some insurance companies they use third party rating systems. Okay, they use. In some
Okay.
companies, insurance companies, they use third party rating systems. Third party rating system. It's a separate product. Rating system is a separate product as policy center billing and claims. It can be
Mm-hmm.
separate. Okay.
Okay.
System rating engine. It can be a third party product which calculates the premium. Which calculates the premium. This is called rating engine. Okay. Right. Rating engine.
Okay.
Rating engine majorly calculates, right? So the system premium, everything will be calculated by the rating engine. Rating engine auto calculation. Based on the inputs we provided, automatically it will calculate the premium. That is called rating engine. So these are the four basic concepts that you will be seeing in the rating. One is about the rating factors, means on based on the what factors are we doing it. That is point number one. Second is about the based on the rate book, whatever the rate book that we have. So rate book means which is a basic premium rate table, etc. That's called rate book. Third is called rating rules, means what are the logics that we are applying, right? So conditions, etc. Everything will be called as rating rules. These rating rules majorly applied even when we are writing the underwriting rules also. That's the reason why you will be seeing rating concept only in policy center, because you have to calculate the
Mm.
premium for the new policies or existing policies when they come for a renewal. Okay, so
Okay.
in the underwriting rule, rating rules can be written and the underwriting rules also. Okay, we can write it. So that is called rating.
Okay.
Third is about rating engine, which is already calculate the system based on the inputs that we have given or the logic that we have given. For example, high value premium vehicle. Okay, for example, the value of the vehicle is more than 90 lakh rupees or 1 crore, which is a high value vehicle. High value vehicle premium will be at the higher level. Okay, very high, usually,
Mm. Mm.
because if there
Mm.
is any damage happened for the high value vehicle, even repair cost will be so expensive. And at the same time, what are the components that you required may not be available outside. So that who has to decide? That underwriting team has to decide what type of vehicle is this. Okay, this vehicle is something manufactured in other country where you don't find any spare parts and all everything in this country. So generally, what insurance companies do? Insurance companies don't insure that vehicle. Why? Because if there is any damage happened, there is no replacement because you don't find the components over here. Or sometimes even though components are parts are available, those are very expensive, very expensive. So if for example, if we have not taken all these into consideration when we have taken insurance, when we have given insurance, what happened? If there is any as a damage happened, insurance company has to bear the cost. Right. That's the reason why these are high risk. That's the reason why every insurance company do reinsurance. Means insurance company is protecting the risk of the customer property or vehicle. Now, in this process, insurance company will also be at risk. So what they do reinsurance in other insurance company. That is where the concept called reinsurance come into picture. Understood? Got it, right?
Okay, means can you repeat this one?
It's very
Reinsurance
simple.
means
See, the point
mm,
is
mm,
insurance company. Okay, what insurance
mm,
company is doing? Insurance company is issuing policies to the customers. If there is any
right.
risk is happened or any damage, if there is any claim, they will do the reimbursement. Okay. In
Right.
the
Right.
process, what is the undercurrent process here? Undercurrent point is because of this, the type of business they were doing, the insurance company will also be at the risk.
Mm,
Insurance
mm,
company will
mm,
also be risk. Okay, so who will bear this risk? They have to insure their company in other company. Understood. For example,
okay.
I'll give you. If you remember, a couple of months back, or so, I think last year, there was a major fire accident happens in LA, in US. You know that LA, Los
Yes.
Angeles, right?
Yes.
So
Yes. Yes.
very high costly, high premium, high expensive properties were damaged. You know that because
Damaged.
of the fire accident.
Right. Mm,
You must be
mm,
heard on the news, right?
right.
So
Right.
at this kind of situation, assume that there were many houses which were damaged. Assume that, example, there were 10 houses were there, or else 5 houses were there. 5 houses are very expensive. All the 5 houses have taken an insurance policy from one company called XYZ.
Mm,
Now, usually all 5 people cannot. Usually it won't happen because all the 5 people will not be applied for
right.
claim at a time. Usually it won't happen. Okay, generally. But in this
Mm,
condition,
mm,
what happened? Because of
right.
the fire accident,
Right.
all the 5 people will apply for a claim. So what insurance
Mm.
company do? Insurance company will
They
be
are in the loss actually.
absolutely. Why? Because if they wants to bear that cost, it's really
Mm,
because these kind of conditions may happen. Okay, may
mm,
happen.
mm,
That one more condition I'll tell you. Due to the present geographical,
mm,
present
mm,
conditions in Middle East or so, many cargo ships, insurance companies are declining not to give any insurance. They are not giving insurance for the cargo ships.
mm.
If you see the news,
Okay.
why?
Okay. Mm,
Because that place where the vehicles are transporting, those that area is right now in the war zone. Okay, the
mm, mm,
property or that one may get caught. Okay, may get caught with
mm,
fire or
mm.
damage also. So the reason why what
Right.
insurance companies are doing, whoever is going in that route, whatever the cargo ships, insurance company has decided and they have announced that we are not going to give any insurance in that route if there is any cargo ship is going. Because it is at the high risk it is no, because there is you cannot say nobody, it is not in anyone's hand. Right? So anything happen at any point in time. Uncertainty is more. In the beginning, in the
Mm.
regular days, there won't be any risk. But now the risk is very high. For example, if any insurance
Even
company,
they have a premium also. They are not
they
ready
cannot, they
to.
cannot. For example, right, you are
Okay.
asking a wise question. I'll tell you. For example, someone has taken the premium. They have paid the premium.
Mm,
The
mm,
vehicle, the cargo ship is on the route, en route, right? Now,
mm,
what
mm,
insurance companies do? Insurance company announces, even though you have paid the premium, we cannot bear this cost. Why? There
mm,
is a subject to condition. These kind of situations never we expects or we don't think that it expect it happens. But unfortunately,
Right, right.
condition has arisen. What insurance company? I think Lloyd Insurance or someone has announced we are not going to give any kind of damages for the insurances. We are not going to insure for the cargo ships whoever is traveling in that route. They have announced it.
Mm, mm. Right, right.
Understood? Got it? You're clear.
Got it. Yes, yes.
So what I'm trying to say, what is meant by reinsurance is this. Because
Reinsurance. Yeah.
I have an insurance company. I am insuring risk for someone's. What about my company?
Mm,
At one point, because
mm,
I'm insuring because whatever the premium I'm collecting, sometimes more than the premium what I have collected, what I'm repaying back sometimes will be heavy. That time
mm,
my company
mm.
will be in the doldrums. So what I have to do,
Right,
safer side, I have to insure my company in some other company. Okay, I'm taking insurance of my company with some other insurance company. That is called reinsurance.
mm, 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 mm.
Understood? Got it? Clear. Because if
Yeah, yeah.
this company is in doldrums, who will save? Who will save this company? They have to take insurance so in some other company. Why? Because if there is any unpredictable loss, certain loss comes, it has to be compensated.
Right,
Did
right.
you understand? Got it? Clear.
Yes, yes.
So this is where generally the concept called insurance comes into picture. Okay, this is what generally coming
Okay,
back to the
okay.
point. These are the concepts. One is rating factors which are
Mm,
driver's age, coverage, age of the building, all that. Rating book, rate tables, etc. Rating rules, whatever the logic that we are applying, followed by rating engine when system is calculating premium. So these are the four basic concepts where rating come into picture. Now, from a developmental point of view, when you want to do the rating configuration, what are the steps? This I am going to explain in the next session. Okay, what are the
okay,
different
okay.
rating configuration steps, etc. So this part I'll be covering in tomorrow's session. Okay, got it?
Sure. Okay.